What's going on, y'all? Matt Garland here, NMLS number 58700, better known as MG the Mortgage Guy. We are live. We are blessed. Thank God for another day. Welcome back to the channel, everyone. We're going to have an exciting episode today. But first, let me handle my business. Let me pay some bills. My DMs and everything have been blowing up, and I'm getting sick of y'all today. But we're going to get to this right real quick. You know I got to advertise myself. Go pick up the books, mgbookstore.com. We still got that BOGO going on. Buy one, get one free sale. So make sure you guys go to mgbookstore.com. That sale's ending tomorrow at midnight. I'm not letting it stay past that, okay? And then go to mgmortgageacademy.com. But we're going to talk about that a little bit more later. But if you're new here, welcome. Subscribe to the channel. Hit the bell for notifications because you never know when we're going to go live. As always, Happy New Year, first and foremost, to everybody. Welcome back. We are live. We are blessed. If you're a realtor, type in chat, what market, where you're from, put your information. Let's be a resource to the people because they're going to need your assistance this year because it's going to be one hell of a year. Let me roll up my sleeves for this one today. Now, we're going to talk about HELOCs, velocity banking, and all this good stuff today. This is going to be a good one. This is going to be a good one. I got a good feeling about this one, right? So, over the past couple days, to start the new year, my DMs and my text messages have been going crazy. When I tell y'all crazy, absolutely bonkers behind a post, a clip of Myron Goldberg, right? Now, those of you who don't know Myron, he's an OG. First of all, this is no Myron slander. I don't slander nobody on my channel. And I want to be very clear. This is by no means no slander on Myron. I think Myron's a good dude. I met him a couple times at conferences. He's an OG. He loves God. I love how if you go to his channel, on his YouTube, he's always spitting Jesus gems. I watch his channel for the Jesus gems because the way he breaks down getting money with the Bible and everything like that is kind of legendary. So I ain't going to hold you up, right? But, and I'm going to shout out Carter Cofield because his post went viral. He put out this post of Myron about 2 or 3 days ago. And man, this thing has been going bonkers. I think right now it's over 4 million views in like 2 days, right? So people have been, and this is no slander on my guy Carter either, right? I respect both of these gentlemen. But this post, man, it's just been like, people would just keep sending it to me. And it's like, it's getting on my goddamn nerves. People sending it to me. I ain't gonna hold you up. It really started blowing minds. So I said to myself, Self, let me come on Rants and Gems today and let me talk about this. Shout out to Social Proof in the comments. I rock with Social Proof. Shout out to my man Dave and Donnie, right? Shout out to them. But again, like I said to y'all, this is by no means, no slander on the OG Myron. He's an OG. He gets to it. He's helped a lot of my people make a lot of money. So this is no slander. I just want to have a conversation about HELOCs and velocity banking because people really don't understand what the hell is going on. So let's go to the video. First things first, to get y'all up to speed, let's go to the video. Let me go to my Instagram page. Let me know y'all can see my IG. Let me know if you can see my IG. Type yes in chats. Throw some gems in the comment. Let me know you can see my IG. Now, this is a quick video, so I'm going to play it a couple times. All right? So you can see my IG. If you don't follow me on IG, go ahead. Even though IG got me shadow banned and I've been at 366,000 followers for the whole 2023. Let me repeat that. I've been at 366,000 followers for the entire 2023. You can't make this ish up. But that's another story for another day. And this is why I'm going hard on YouTube. But let's listen to the OG right here. Ugh, I hate when that happens.
Of credit for the equity that you have and put that home equity line of credit in the first position if you can. Make your mortgage a home equity line of credit. And then every time you get paid, deposit your check into your mortgage balance and then use the checkbook that comes with your home equity line of credit to pay your bills. You'll pay off your mortgage probably in 3 to 7 years if you do it that way. Like making the exact same amount of money you make right now, you'll pay off your mortgage in 3 to 7 years, 12 at the outside, instead of paying off your mortgage in 30 years. What would be better would be to get a home equity line of credit for the equity that you have and put that home equity line of credit in the first position if you can. Make your mortgage a home equity line of credit. And then every time you get paid, deposit your check into your mortgage balance and then use the checkbook that comes with your home equity line of credit to pay your bills. You'll pay off your mortgage probably in 3 to 7 years if you do it that way. Like making the exact same amount of money you make right now, you'll pay off your mortgage in 3 to 7 years, 12 at the outside, instead of paying off your mortgage in 30 years. What would be better would be to get a home equity line of credit for the equity that you have and put that home equity line of credit in the first position if you can. Make your mortgage a home equity line of credit. And then every time you get paid, deposit your check into your mortgage balance and then use the checkbook that comes with your home equity line of credit to pay your bills. You'll pay off your mortgage probably in 3 to 7 years if you do it that way. Like making the exact same amount of money you make right now, you'll pay off your mortgage in 3 to 7 years, 12 at the outside, instead of paying off your mortgage in 30 years. What would be better would...
That's enough. Now, in my Myron's voice, are y'all tracking? Do y'all understand what the OG is saying here? Are y'all tracking? Do y'all understand what the OG is saying right here? I need to know that first and foremost. Do you understand? Because he's not wrong, but he's not right also. It's like, it's a fine line for this, right? It's a real fine line. And this is why I'm asking y'all, do y'all understand? Type no in chat or yes, right? A lot of y'all saying no. We've got a couple yeses. We had somebody in here said they've done it, right? So first things first, Reggie Campbell said he's lost as hell. First of all, what the OG Myron is breaking down is a term, or what we like to refer to as velocity banking. Velocity banking. Okay? Now, velocity banking is a financial strategy aimed at paying off your debts quickly by leveraging a line of credit, or a HELOC, home equity line of credit, to accelerate the repayment of loans like mortgages, car loans, credit card debts. It could be personal loans, etc. This strategy involves using a line of credit to make large payments towards debts while keeping a line of credit balance low by immediately replenishing it with income. Let me repeat that. This strategy involves using a line of credit to make large large payments towards debts while keeping the line of credit balance low by immediately replenishing it with income. This process is repeated every cycle with the goal of reducing overall interest paid and paying off debts faster than with traditional monthly payments. Do y'all understand velocity banking based off of that definition right there? Type yes in chat or no, because I'm going to break this down a little bit more. Type yes in chat or no. Now, Amber, I'm going to get to that in a second. Amber said, who's going to subordinate their first mortgage position? We got to go through all of this so that way you guys can really understand everything that's being said here. Some of you saying you barely understand. Some of you saying yes. Some of you saying no. Right? So there's a lot of variables to this. And let me break this down a little bit more layman terms for you. Basically, make a long story short, if you own a home what he is saying is you need to have a HELOC instead of a first mortgage. A first mortgage is a conventional mortgage, Fannie Mae, Freddie Mac, FHA, VA, USDA. Those are considered first mortgages. A line of credit or HELOC is traditionally in second position. It's subordinated in second position, meaning first position, the FHA conventional VA loan gets paid first. If you can't pay your mortgage or something like that, that loan is in first position. So if a foreclosure happens, who gets paid first? The loan in first position. You following me? The HELOC traditionally is in second position behind the first mortgage. So in the event of default, the HELOC gets paid last. That's why in the clip, Myron said, you get a HELOC, and first things first is the HELOC has to be in first position. Now, here's the problem with this. Here's the problem with this. Here's the problem with this. Most lenders, most people who are purchasing homes are using VA, 100% financing, FHA, 3.5% down, or conventional mortgages, which require anywhere from 3 to 20% down. The average person is probably putting anywhere from 10% down, just in the grand scheme of things of all the loans out there. But in our community, I would probably say the majority is putting down the bare minimum. So problem number one is you don't have enough equity in your home to do a HELOC, first things first. And you don't have enough down payment to even start off if you're purchasing a house with a home equity line of credit. Are y'all following me here? Because I'm gonna give y'all a lot of information on this, and I don't want to lose nobody in the comments. Type yes or no. Do you follow exactly what I just said now? Type yes or no, please. Okay, so we got a lot of yeses in the comments. A lot of yeses in the comments. Okay, great. So y'all following me on this one. Good. So that's problem number one. Most people, when they're buying a home, they don't have enough down payment. Now, there are lenders out there that will do a HELOC as first position when you're purchasing a home. But those lenders will require a larger down payment, anywhere from 25 to 40% down payment. Type in chat 25 to 40% down payment. Okay? 25 to 45% down payment. Let me bring these comments back up here so I can see what the hell y'all got going on. Okay? So 25 to 40% down payment. Now, if you are able to do a HELOC, and those of you who are talking about personal loans and the credit, please relax, right? Because most of you guys, first of all, let's call a spade a spade. Personal loans ain't going to give you enough money to pay off your mortgage. You ain't getting no $500,000 personal loan. Sorry. Okay? You ain't getting no 400,000, 600,000, 800,000 personal loan. So please, let's stop talking about personal loans. Okay? The way the strategy really works is if you are getting a home equity line of credit, because the home equity line of credit will give you a lot of money. Some lenders will cap you at $500,000. Some will cap you at 800,000. Some will cap you at $1 million, just depending on the bank and their guidelines. So again, let's stay off this personal credit crap in the personal line of credits in the comments, please. Stay focused, man. Stay focused. So now, You have the down payments to do the first mortgage. Now, what people normally do is when they're trying to replace their first mortgage with a HELOC, is they'll buy the house, boom, 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 pay it down, whatever it is, home appreciates, then they'll refinance out of the first mortgage and into a home equity line of credit, which for me, it doesn't make any sense to me, right? Because now, let's just say you have a $500,000 mortgage, and now you put that whole $500,000 mortgage into a home equity line of credit, and it's your first mortgage. You have, first of all, let's talk about the terms of HELOCs, right? HELOCs, just for those of you who don't know, HELOCs are a 10-year draw period, right? Meaning you use it, pay it off, 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 use it, pay it off. Okay? And then after the 10 years, it turns into a fully amortized loan, which is still a variable, and it can go from 10 to 20 years, just depending on your original terms and the lender that you got the HELOC from. So the first 10 years, it's an adjustable rate. It's not a fixed rate run. A home equity line of credit is not a fixed rate. And the rates are based off it's not like mortgage rates, right? Where mortgage rates, Fannie, Freddie is kind of determined, bond markets moving up, left, down, is determined by the Wall Street Journal prime rate. Now, I'm showing you guys on my screen right now what the Wall Street Journal prime rate is today. 8.5%. Now, when you're looking at a HELOC and you'll see it online, you'll have an introductory period for most lenders who are offering HELOCs. Some might be 6%, 6.5%, but it's only for a short period of time. It's an introductory. It might be for 4 months. It might be for 6 months. It might go as long as 12 months. But after that, you'll be right here. Now, a lot of lenders with HELOCs charge a margin on top of this. This is how they make money, right? So a lender might say, yo, my HELOC rate is 10% today. And last year, the average HELOC rate, just so you know, was 10%. And that's why I'm saying that, because it's prime plus 1 to 2, depending on credit score. And that's usually the margin of how the banks make their money, because there's no closing costs typically on these loans, right? So let's just say, just for this conversation, you're starting off at an 8.5%, which is an interest-only adjustable rate. It's not a principal and interest payment. It's interest only. Type interest only in chat, please. Type interest only in chat, please. Interest only in chat. And Oprah JM says, my HELOC is 10%. Exactly. So when you're doing this HELOC, and if you put, let's just say you pay off your mortgage. Let's say your mortgage payment is, your mortgage amount is your balance that you owe when you refinance out of your first mortgage and into a home equity line of credit. Let's just say it's $500,000. Now, you're using, and the bank gives you the $500,000. So now your interest only payment is 8.5 times 500,000. Somebody give me what that payment is. Let's see. Get your calculators. Let's see if y'all can do the math. So do 500,000 times 8.5%. Then divide that number by 12. Tell me what you get. Tell me what you get in chat. Do 500,000 times the prime rate of 8.5%. Then divide that number by 12 and tell me what you get in the chat. Let me see the chat. Let me go back to this. We're in class today. What is the payment? Type it in chat, please. Type your payment in chat. Okay, so we got a couple who got it right. Precious Gem says 35.41. Okay, so now that is your interest only payment every single month. That's not your principal. There's no principal being paid to that, ladies and gentlemen. There's no principal being paid to that. It's only interest. So in order for you to pay down the mortgage or the HELOC, you have to add principal on top of that. Because if you make the minimum payment, it's just like a credit card. You make the minimum payment, your balance ain't going nowhere. So this is why, for me, if you don't have large sums of cash coming in to where you can go ahead and pay down your principal balance, does this make sense? To put yourself in a position that you have to pay this down in 10 years, you're putting financial stress on yourself. This is why I always tell you guys, I don't like 10-year mortgages or 15-year mortgages. Give me a 100-year mortgage. I don't care, because I want the cheapest possible payment every single month, and I can control my principal on my own without stress and headache. So for me, again, what OG Myron is saying, he's not telling you no lies. He's telling you, yes, you can put if you can get a HELOC, first mortgage, and you have the money to put down on your principal balance every single month, then yes, you can do that. But to me, that makes no goddamn sense. Why am I going to stress myself? Now, let's really get busy. Let's really get busy. Shout out to Dave. I see my man Dave Shantz is still in the building. Shout out to Dave Shantz. But let's really get busy. Let's go to a payoff calculator, shall we? Because men lie, women lie, numbers don't. Men lie, women lie, numbers don't. Right? So I put in some basic information here. Right? 500K current balance, the APR 8.5. I'm not including any rate changes every year because we're not going to get that far on it. Your payoff goes 120 months. It's saying the current payment is $24.97, which is a little inaccurate, but annual fees. So this is basically saying that you will have to pay $6,200 a month to pay off your HELOC in 10 years. $6,200 a month to pay off your $500,000 loan in 10 years. $6,200. Now, again, you need cash flow coming in to afford that. Now, let's go on the flip side. If you got a mortgage today at a 500K, same thing, 30-year term, and let's just say the rate is 7%, right? Your monthly payment is $3,300, principal and interest, right? So what was that, 6,200? So let me do the math real quick. So let's see that difference. So 6,200 minus the 33, and I'm right here, y'all. I'm gonna highlight it so you can see it. 33.26. So that's an extra $28.74 a month. So if you do $28.74 $28.74 a month, according to this calculator, you'll pay off your 30-year mortgage in 9 years and 2 months, right here on the bottom. Y'all see it right here? Let me blow this up a little bit. Pause. Oh God, what did I just do? Okay, here we go. So y'all see that right here? The remaining balance is $500. By paying an extra $28.74 per month, starting now, the loan will be paid off in 9 years and 2 months. It's 20 years and 10 months earlier. This results in $519,000, almost $520,000 in interest savings. So what's better? Is it better to get a HELOC? Is it better to get a HELOC and do the velocity banking thing and put yourself under unnecessary pressure and stress because now you have an adjustable rate, you have an interest-only payment, and let's just say life starts lifing, and now you can only pay your minimum payment. Well, your minimum payment on that $500,000, because rates are still high, right? Look, the minimum payment, what we typed in chat, y'all, $3,400 a month, interest only, right? That was on a HELOC. But because that rate is 8.5% interest only. The annual is the mortgage with principal and interest at a 7% right now is much cheaper. By a couple dollars, by $100 still. And it's going to principal. Do you guys understand what the hell I'm saying here? So for me, look, if you want to do velocity banking and doing all that good stuff, go ahead, knock yourself out. Go ahead. Knock yourself out. Shout out to my brother Dave Shantz with the super chat. I appreciate the love, my brother. We love super chats over here at Rants and Gyms. Please keep them coming. And please keep them coming. Pause. Right? So if you want to, he might have to slide the webcam over a bit so we can see the payoff with the payoff. No. We don't have to slide nothing over. Pause. Let me just make this a little bit lower. You trying to say you can't? Oh, okay. I see what you're saying. You know what? Let me do this. Hold on. I see what you're saying. Pardon me. Let me move myself over here so you can kind of see what we're talking about here. Okay, is that better? I just moved myself over a little bit. Is that better? Okay. So you can see if you pay that same monthly payment that you was going to pay on that HELOC, you can still accomplish the same thing in 9 years. Actually, in 9 years. The numbers are right here. I'm giving you the math. The path is math, ladies and gentlemen. The path is math. Now, again, I want to be very clear. This is no dig at anybody who talks about velocity banking. This is not a dig at the OG. The only reason I'm the OG Myron, let me be clear. The only reason I'm even talking about this is because y'all keep DMing me this damn clip. Leave me the hell alone. Stop asking me if you can do this or if this is true. I love the fact that y'all do it, but golly, my text messages, my DMs, I'm trying to relax and get my life together. But now I got to come here and I got to talk about this stuff, which is okay because I'm here to educate you, ladies and gentlemen. I'm here to give you an unbiased opinion because the math is the math. And I'm just telling you, me personally, I don't think it makes much sense. Because now with this HELOC, yes, do you have flexibility? If you pay it off, it's still open? Absolutely. I love home equity line of credits. Let's not get it twisted. Let me put myself back on the screen real quick. I just want to be clear. I love home equity line of credits. I think they are great. I think they are a tool to help you build wealth if used correctly, like any debt instrument. If used correctly, it can help you build wealth. I personally like to have my HELOCs in second position because for me, I'm looking at the HELOC strictly as a way that I can use to reinvest into other things. And it has nothing to do with my first mortgage, although it's attached, the lien is attached to the primary residence. But the first mortgage is the first mortgage. I pay that off whenever I want to. This HELOC, we're going to move and shake and make things happen and pay it down and use it like a credit card and just keep moving and shaking. But now, having my HELOC as my first mortgage for me doesn't serve my purpose because I can just pay down my mortgage faster. And I have no stress. So if I say to myself, you know what, business is slow, money ain't falling off trees this year, I don't want the headache of paying this damn mortgage off. So I'm gonna let this thing ride and I'm gonna just pay my principal and interest. Now, I am a fan of interest-only mortgages as well. I'm a fan of them. But I like, me personally, I'm only speaking for me now. If I can get back, if we can get loan products where we can do 30-year fix with the first 10 years interest only, and if it was conventional type interest rates, sign me up. Sign me up. I would do it in a heartbeat. I had a couple of those loans back in the day. Sign me up because I can control my own principal. But I like to know what is my payment every single month. But again, velocity banking is not, I know people like to throw the word scam around and shit like that. It's not a scam. It does work, but you have to be flush with cash. You have to be moving and shaking. Money has to be coming in. You have to be disciplined. You can't just be someone who's living paycheck to paycheck and think you're going to do this and it's going to work. No, it's not. Sorry. I hate to break it to you. I ain't going to lie to you. I ain't going to do any of that to you. I'm going to just tell you the God's honest truth because you know why? I can say this because I speak to so many people every goddamn day for the past 20 years about their loans, and people are basically barely surviving because every year their taxes and insurance is going up. So they don't, the extra money that they thought they had to pay to the mortgage, they got to pay in their mortgage payment because their escrow went up. This is for financially savvy people who are getting to it, who are making money, who have surplus of capital, cash coming in, and can do this velocity banking with the HELOC. This is for people who have a substantial amount of equity already in their homes and they have good credit, preferably over 720 for HELOCs. Below 720, you can still get something done, but 720 and higher is better. This is for full documentation people. This ain't no doc, light doc, bank statement type of HELOC. You're not getting it. This is for people who, on paper, are attractive to a credit union or a big retail bank. This is not for people who are self-employed, make $1 million, but show Uncle Sam I only made $20,000 after all my expenses. This is not for you. And I'm just being honest with you. No BS, no shots at nobody. I'm just keeping it a buck with you. And I'm going to pick a bone with y'all. All of y'all who watching this right now and who going to watch this on a replay, I'm going to pick a bone with y'all because I see videos like this and they go viral in 2 days, 4 million views. And it's incomplete information. It's not for it's like, yo, y'all are so prone to the bullshit and the foolishness. It makes me sick sometimes. It almost makes me not even want to put out content some days. It makes me just want to say, forget all of this because I'm wasting my damn time. Like, I put out so much great information and it goes nowhere. And then I see clips like this and I'm like, yo, what the hell? How is this going viral? Because there's so much missing from it. There's so many variables. But it just shows me that people want shortcuts on everything. Most of you just want shortcuts. It's despicable. I hate it. And it makes me sick to my stomach. Like, it makes me sick to my stomach. I'm sorry. I had to say that. And I'm pretty sure I'm not the only person who feels that way, who works hard to put out content for years. And it's like, yo, how the hell is this going viral when it's so incomplete? People like drama, y'all like incomplete information, and then y'all hit up people like me. Yo, MG, I just saw this. Is this accurate? Fuck out of here. Leave me alone. Because when I sit here and I explain how HELOCs and everything work, y'all don't watch it. And I appreciate y'all. Let me put this comment on here. Shout out to Derek. I had to vent. That was a little rant. He said, we heard the clip and knew to come to you for insight. Appreciate you. Thank you. I appreciate y'all too. But God damn it, man. God, I mean, look. watch the free content. Rants and gems will just get you right. It's definitely not a scam. Joey says there was a lot of info missing from that video. It's not a scam, but there's way more to it and thing you need to have for it to work. MG said them. Good credit, equity, and heavy cash flow. Facts. Right? Very important. All of this stuff is extremely important. Right? Now, let me go to a commercial break real quick, right? Since I got y'all attention right now. Look, y'all know I'm having a 4-week path to home ownership masterclass. Now, everybody in the academy, if you're in the academy, type academy in the comments, please. Type academy in the comments if you are in the academy. So I had a meeting with the team this week. And my team says to me, they say, yo, MG, let's start the year off right by giving the, and this video is kind of what prompted the team to come to me and say, yo, instead of just making this exclusive for academy members, let's make this 4-week masterclass free. I didn't want to hear that free shit. But clips like this and reading the comments and seeing all these things come to me make me realize that there's so many people who just don't understand. So look, this is what I'm doing. My path to homeownership 4-week masterclass starts Tuesday, January 9th, 7 p.m. Eastern Standard Time. If you are part of the academy, it's included in your membership and you will have access to the replay. If you are not a part of the academy, I'm giving you a link to register for free. You will not have access to the replay. So if you watch it live, take a lot of notes because you won't get access to the replay. This is going to be my only free masterclass in 2024. I told my team I'm not doing nothing else for free. No teaching for free because this is 12 hours of information I'm giving y'all. So if you're trying to purchase a home in 2024 and you really want to understand the game, I'm giving it to you for free, okay? You will not have access to the replay. Only my academy members will have access to the replay. And my academy members, out of the 4 weeks, 2 of the weeks on a Thursday, we're going to have a special Q&A strictly designed to answer my academy members' questions. We're going to do that twice within the 4 weeks, every other Thursday probably. So next Thursday, my academy members, you're going to get the link for the 4-week Path to Homeownership Q&A session that we're going to have, which will probably be 90-minute sessions. And please, my Academy members, when you join that Q&A session on next Thursday, let's keep the questions kind of geared towards the course. Okay? So we're going to do 2 Q&A sessions only for Academy members, but the 4-week master class, the pathway to home ownership, will be free. So click the link that I'm putting in there. Register today. Seating is limited. I repeat, seating is limited. Register today. The link is in the comments. Okay? I'm going to put the link in the description for those of you going to watch this on a replay. Seating is limited. It's free. You don't get access to the replays. Watch it live or oh well. Academy members, obviously you'll get access to the replay. This will be my only time I do this year. So take advantage of it because the goal is to help as many of you as possible get to the finish line. Now, the Academy right now is $99 annually, but we're changing the pricing on that. It's not going to be $99 no more. It's going to be monthly. Okay? No replay. What the Academy do? I saw the funnel for the Academy on the link. Well, you need to join and pull up, right? So pull up. Link is in the comments. Link is in the comments. Link is in the comments, okay? Get the replays. Become a part of the Academy today. Hold on. Okay? So Sun Kisses, you're absolutely right. Yep, that's why I became a member. Replays. Now, again, today, the Academy is $99 annually, but that's going to change in the next couple days. It's going to be a monthly. It's not going to be $99 annually no more. It's going to be a monthly. I'm not going to tell you what the monthly is. It's going to be dirt cheap, like $20, but it's going to be more expensive than $99 annually, right? So it's going to be $20, which is like $240 a year. So I'm gonna make it even more affordable for people by making it a monthly. So take the option now to get, if you want to join the Academy, do it for $99 annually, and take advantage. And that elite access done after tomorrow. Okay. Go to the website, man, mgmortgageacademy.com, Chuck. Nobody got time to be telling you what it's about. Go to the website, bro. mgmortgageacademy.com. Just join. It's the best $100 you'll ever spend in your life. I promise you. All right. So we've been on this for 43 minutes. I gave you my thoughts. Again, let me repeat them. For those of you who are just joining, let me repeat them. This video is by far no slander on the OG Myron. Velocity banking does work. Hold on. Movado said, don't be rude. I don't know who Movado's talking to, but you look like my auntie, so I won't be rude to you. I'm sorry, Movado. I will apologize to you. Okay? Let me get back to my commercial. Once I saw your picture, I changed my thought process because I was about to go somewhere else with this. But Movado 41, thank you for tuning in. My apologies if you thought I was rude. Okay. Again, OG Myron was not wrong, right? He was not wrong. Velocity banking is something that can happen. You can get it done. You can, but there's a lot of variables to this. A lot of variables to this. And in this video, I broke down the variables for me why I don't think velocity banking makes too much sense when you can just pay all the extra money in your current mortgage and just pay it down as you choose. Right? That's just me personally. So again, it's no slander, no shots, because I don't want people to feel like that way. I met Myron a couple times, real OG. We had a great conversation. I forget what it was. I think Path to Prosperity conference, had a great conversation for like 20, 30 minutes. But That video has been sent to me 1,000 times, and I just had to address it here on Rants and Gems. And I hope that you guys got some information, some value from this video, and gave you a better understanding of home equity line of credits, velocity banking, amortization schedules, and how kind of like all this stuff works, right? Like, this is different. You know, they say different strokes for different folks. There's always a strategy, ladies and gentlemen. There's always a strategy. Not every strategy is going to be for you. Not everything is going to be for you. You have to figure out what works best for you and go down that path. Do not sit here and try to do everything. Figure out what works and put your foot on the gas on that. Not everything's going to work. And if it doesn't work, it's all good. Find something else and do it. But when it comes to real estate, in my personal opinion, in my professional personal opinion, if you want to pay off your mortgage faster, just pay it off. Make extra payments. You don't have to get funky with it. Okay. Let's take some questions. Ari, why are you still lost? What are you lost about? Talk to me, please. I've been on it. I got 10 more minutes. I'll stay on here. If you're still lost, tell me why you're lost in chat, please. Let me try to answer some of you. Let me try to make you guys unlost, if that's a word. If that's a word. Let me see. Let me get some of this. Just swipe it does have restrictions, like you can't pay loans with credit cards. I don't know what y'all saying. Y'all got your own conversations going on here. Okay, let me catch up. Using credit cards or HELOCs allows you to use your dollars more than once or at the same time. Joey Cross said using credit cards or HELOCs allows you to use your dollars more than once all at the same time. Me personally, I love the leverage HELOCs and credit, right? I can use the credit, pay it off, use it, pay it off, get bigger lines. Like, I like it. But again, I'm in a different financial position than most. When you're not in a financial position, then you got to be tread carefully, because that could be the matrix for a lot of people. Growing up Jamaican, late for class, I missed the gyms. This must be a rewatch. It definitely is. It definitely is. Uh, how does the velocity method help with the mortgage payments? It helps because now you're not doing the first mortgage no more. You're going to have a home equity line of credit, and you're making payments to your home equity line of credit. It's the same thing. It's just one is a mortgage, one is a line of credit. That's it. A line of credit you can use, paid off, use, paid off. A mortgage you can't. So as you pay your debt, think of it like a credit card, a big ass credit card, basically. You use your Amex, you swipe 100,000, you got to pay off your 100,000, or the minimum payment, which will probably be 60 to 70% of that 100,000. So they probably gonna want a payment of 60 to 70,000 the following month. Sometimes they get gangsta and they want 85%, just depending. Does it lower your mortgage? No, it doesn't lower your mortgage. You're paying off your mortgage balance and you're basically transferring the mortgage balance to your home equity line of credit. And yes, it lowers your payment slightly, depending on the interest rate, right? But in most cases, like we just did in today's rates, no, it won't make your payment lower because HELOCs are around 8.5 to 10% right now, where mortgage rates are 6.5 to 7. Uh, what you said? Because what you still have to pay the HELOC. Exactly, Lake and Banks. You still have to pay the HELOC. Exactly. Do another math problem, MG. We'll save that for the academy. I did enough math today. CG says, MG, maybe scam is a strong word, but will you at least admit the velocity banking makes no sense? I mean, for me, it doesn't make no sense. For me, and again, I can only tell you what my opinion is. And look, different strokes for different folks. There will be people on in the world that will swear by velocity banking and say, yo, this is the greatest thing that ever happened to them. Well, good for you. Good for you. Somebody might say they love pig feet. I'm not eating that shit. They might say pig feet is the greatest thing in the world. I'm not touching the pig feet at all. So different strokes for different folks. Everything ain't for everybody. I just prefer to do mine's a different thing. Where do you pay? I'm not sure what you're talking about, Ronnie. Cause Ty says, cause what's the point of it? You can just put towards your extra principal. Agreed. I think selling my single family. All right. Aura Ramirez says, I think selling my single family house for a multifamily is going to be the move. Even if I'm using a HELOC, it still won't be worth it. Even if I use it, buy another one. Well, you can use the HELOC to buy your next property, or just not even like you just said, sell and then take the proceeds and buy the multi. Matthew Lee says, is a $10,000 HELOC worth taking out? I don't know. Is it worth it to you? That's a question that only you can answer. I can't answer it. I have no clue. What I would say to anyone, if you're going to take out any type of credit card debt or HELOC, you need to have a plan of action. Just don't take out 10 bands and you don't know what you're going to do with it. So you need to have a plan of action because it has to get paid back. So what's your plan to pay it back? Lakin says, I'm from Canada. My HELOC is 7.7%. My mortgage is 5.8%. So I don't get how this will be beneficial. Well, shout out to you from checking in from Canada. I love Canada. Shout out to all my people in the six. And I agree with you. I don't see how it would make sense. So your HELOC, you just use that to just buy real estate, invest in businesses, or do whatever you got to do. My people in ATL trying to buy a house don't have money for down payment on Section 8, but my dude's a vet. Any recommendations? Uh, if he ain't got no money, he shouldn't be looking to buy no house. So my recommendation for your dude who's a vet, thank him for his service, first things first, but you need to go get some money. Mm-mm. Chuck, tell your man, don't even be thinking about no buying no house without no bread. Even if you can do a VA 100% loan. Nah, we ain't about that. Don't be house rich and cash poor. Hey, I paid for a program that offer that it didn't work. I paid 8,000. I'm pissed. Lady Miz, what are you talking about here? I paid for a program that offer that it didn't work. I paid 8,000. I'm pissed. Lady Miz, please explain more in the comments. What are you speaking on? I have no clue what you're talking about here, Queen. Talk, tell me some more. drawing from your HELOC hurts your credit score. Yes, it could because now Fuji TV. Now your utilization is going up. Great point. As you draw on that HELOC, utilization is higher and higher and higher. Credit scores can definitely get impacted. Just call me Ash. Please let these people know this is just a financial tool to utilize. Yep, I said that a couple times, Ash. And she rolled her eyes, I think, too. Oh no, that's just your name. Okay. Amber says, not for a mortgage, different higher interest debt may work. Possible. Anything is possible. See what Joey Cross talking about. It doesn't make sense to people who have sense. What? It doesn't make sense to people who have sense. You don't use it all the time. You use a layup when you close onto the hoop. Yep, and fade away at other times. It depends on. Yep, I like that. You use a layup when you're close to the hoop and a fade away at other times. It depends on what you want to do. That's a fact. Different strokes for different folks. Arthur says, but don't you save more on interest over time with velocity banking? You can do the same thing with a first mortgage and just paying down your principal balance. You save over time. I had a whole example up here. I showed it's the same thing. Most people are scared to use a HELOC on a primary to buy a rental. It's called leverage. Agreed. Great comments today, Joey. You tapped in. Okay, let's see. Lady Miss says we paid for the pill method. I don't know what the pill method is, and realized the program was BS. The guy refused to give us our money back. Then stopped talking to us. I still think I'm going to get a lawyer. People need to stop scamming. I have no clue what the pill method is or what it has to do with HELOCs and velocity banking. I have no clue. I'm sorry you feel this way. Um, I have no comments on that. Um, let's see. A said, isn't HELOC charge simply interest and mortgage interest compound? My response in regards to the person comparing charges on HELOC with a mortgage. Look, a HELOC is a HELOC. Interest is interest. You're going to pay interest regardless if it's a HELOC or a first mortgage. Either which way, you're going to pay interest. It doesn't matter. If you want to beat the interest trap with anything, what you got to do? Pay down your principal faster. It's very simple. This is not rocket science, y'all. We don't need fancy names like velocity banking and all types of strategy names and all this other shit. This is just really not rocket science, y'all. It's you're borrowing money. The bank needs to make money for lending you money. They're going to charge you interest. If you follow the payment schedule, you will pay a lot more than you borrowed. If you don't want to pay a lot more than you borrowed, you put extra money towards the debt. Simple. It's just called pay your bills. 8,000 per month and promise we could pay off the mortgage in 7 years. It was BS. Again, I don't know, ma. She said it makes it hard to trust people because there's so many scammers. I mean, look. See, now let me shut up. I'm not even gonna get involved in this. Let me shut up and let me go to the next comment. Sorry you feel that way, Lady Miz, but my name is Bennett and I ain't in it. And let me not even open my mouth what I was about to say. Um my current zero interest up in June 23. Nobody wants to share the real shit. I agree. How is it okay? How is it leverage to use a HELOC for investment property if we just did the math? That's wild. No, it is leverage to use a HELOC So now you keep your first mortgage as your first mortgage and you take a HELOC as a standalone second position home equity line of credit. Your first mortgage is still there, but the only thing you're doing with the HELOC is that you're tapping into the equity. And now you're taking that equity. Let's just say you have 100K of equity. The bank will probably allow you to get 75,000 of that 100K. I'm just using rough numbers here. You take that 75K, your first mortgage is still your first mortgage. So your FHA, your conventional, your VA loan, whatever you have, whatever that payment is, you're still paying that. You take that 75K on your home equity line of credit, and now you use that to buy rental property. And the goal is to create enough cash flow, not only to pay that mortgage and expenses, but pay that HELOC monthly payment as well. And you still make a profit. So it's called leverage. You didn't use any of your own money. You use equity, which equity is monopoly money. Equity is not real. Housing prices go up and down. Equity goes up and down. It's called unrealized gains. And a home equity line of credit is a tool to help you realize your gains. So if you use a line of credit, use it wisely. That was a gem. You could put a gem in the comment, Sun Kisses. Go ahead, Sun Kisses. Sun Kisses is on point today. Put them gems in the comment, ma. Okay, not the pill method too. There's a guy I know always pushing that for years. Oh my God. I can't with y'all. How did we get on this whole topic of this pill method? I don't know what y'all talking about. That alone was worth the chat. Who's this? Chuck says, Mayweather shared some real. Put an asset in a business and no sale tax state, then sell the business when you want to sell the asset in the business. Okay. I'm not gonna take tax advice from Mayweather. I'm gonna take it from my CPA, but okay. So Lady Miss says, do you think having a HELOC on a primary is better than having it on a rental? Well, there's a lot of lenders that won't even entertain doing a HELOC on a rental. That's number one. Um, so most of the time, how you get a HELOC is because you get it through your primary residence. So HELOCs primarily were designed to tap into equity in your primary residence, not rental properties. Rental properties, most lenders want to do a cash out refinance, not a HELOC. Nah, you good, Lady Miss. I didn't know what the. Now that y'all talking about this method thing, I guess that's the same as velocity banking. So like, no worries. I could have ignored your comment and not put it on the screen, but I wanted to know what it was. And JL Design just kind of broke down as a process of paying down off your debt. I just don't understand. This is what I was gonna say, and I'm gonna ask you this, and I'm just being honest. I just want to know why, Lady Miz, why did you pay $8,000 to learn a method of paying down your house when you could have just took that 8,000 and paid down your house? Respectfully, respectfully. Because I always want to know the mindset of these things. Because people in my community tell me about all types of stuff. You know what I'm saying? Like they paid 10,000 for this, 30,000 for this, and people feel like they're not getting what it's worth or whatever. They feel like they've been scammed or this or that. But my question is always, one, did you apply the information that was told or taught to you? And two, why would you pay that when you could just, if the goal was to pay down the house or the mortgage, why not just use that money to pay down the mortgage? So these are the questions that I always ask myself when I hear things like this. And this is what I was going to say earlier. Fuck it, it's 2024. We're going to have an open, transparent conversation, right? Because in 2024, a lot of you who've been paying all this high money for high ticket items and stuff like that, and I have no problems with people charging for what they feel like their programs is worth. But like I just be at a loss for words sometimes. Like, I don't understand it. I just try to figure it out, you know? Everett says, because we are told that we are paying for the knowledge or someone else's expertise. And I understand paying for someone's knowledge and expertise. Hell, I charge for that too. I charge for my knowledge and my expertise. She said, I know I feel dumb for trusting him because he promised I could pay it off in 7 years, 8,000 toward the mortgage. Wouldn't do it in 7 years. I understand that. And I don't want you, and I'm not trying to make you feel dumb or anything like that. That's definitely not my goal. But since you are active in the comments, let's have an active conversation, right? Like, and that's never my goal because I've paid for shit before and I'm like, God damn, why did I do that? Everybody on here can identify with that. But when it comes to buying programs and stuff like that, like, guys, we got to be more careful of how we're spending our hard earned money, right? First of all, Lady Miz, we all have trusted someone that we've watched on social media and stuff like that, and they've disappointed us in some way, somehow. I'm not exempt from that either, right? I'm not sitting here saying I'm on this glass throne and this has never happened to me either, right? But ultimately, we have to take accountability for what we do. And we have to make sure that we are vetting out this information to the highest level possible. Like, and this is another reason why I decided to make all my products and everything so affordable, right? My academy is $99 annually. If you want to have strategy sessions with me right now, the elite thing is only $500, right? I have a mentorship, which I closed out. That was only $3,000 for the year, and you get 12 calls and unlimited deal analysis with me. Like, I be on Zoom calls and FaceTimes all the time with my mentees. Like, I was on the phone just before this live with one of my mentees who's buying a crib in Alabama, right? Like, and my books are $20. The academy is going to turn into $19.99 a month. Like, I do things at a very affordable level. Like, this is why I'm even making the 4-week class free. My team was like, yo, just make it free. Let's get the people into the houses the right way. Fuck it, right? I personally, this is why I don't like to charge a lot for my expertise and my knowledge, because I hear too many stories of people like Lady Miz and other people who are in the comments talking about they spent thousands upon thousands upon thousands upon thousands of dollars on things and they don't feel like they got their money's worth. And I'm telling you guys, I'm right there with you. I've spent maybe not 8,000 on one program, but I spent a couple dollars on some programs. And I get the information like, this is crap, right? We've all been burnt. It happens. But I personally, when I see the price going a certain way, there's a certain amount of money I'm willing to lose. First of all, we all have to realize, don't put no money out there that you ain't willing to lose. That's why I don't lend money out, because I want my money back and I can't afford to lose a penny, right? This is why I don't do certain things, because I've had to learn the hard way that I can't put money out there that I'm not willing to lose. So when I look at buying educational stuff, because I'm all about personal development, but I got to use a lot of discernment with this too. And I got to say to myself, self, do I really need to spend this X, Y, and Z amount on this program? Or can I really just sit here and, especially with AI, chat GPT my life away and research my life away and YouTube University my life away and do all of this? Like, I got people that want to charge me mentorship, even me with my following and everything, to help coach me through building my house. And I'm like, I could have done that, but I don't want to pay you that. I'd rather figure it out, right? So I say all this to say, we just have to be mindful of how we're spending our money moving forward, especially in the educational space, where a lot of people are not putting time and effort and giving real, true information. But also, I'm going to kick this back to everybody who's watching this too. And this goes for me. You got to be able to apply the knowledge, because a lot of you, including me, buy shit that we never use. We buy books, we never read. We take courses, we buy courses, we never take them to the end, right? So you got to hold yourself accountable too. I have one rental property and been wanting to expand my portfolio, looking for a little guidance, but now I'm just too scared to trust anyone. Unfortunately, I hear you and you're right. Lady Miz, look, if you're here right now, let me tell you something. Just join the academy. It's $100. You'll learn everything that you need to know about scaling your real estate portfolio. And if you want to have one-on-one conversations with me, then get the elite membership. It's $500. You'll get 2 calls. You have my cell phone. You can text me your deals, and I'll help you, right? And if you want 12 months of that, just do the 3,000. But I don't even want to push that no more. Just do the 500, right? And get 2 calls one-on-one with me. It's not group. It's just personal. And I'm telling you, I help so many freaking people do this. Like, it's like it's mind blowing. And this is why I was saying earlier about the videos going viral and I put all this information. I'd be like, yo, why people, yo, for the prices, it's like, yo, everybody on here should be wanting to get this elite membership. Like, y'all all DM me asking me questions, but you have a way to ask me on FaceTime or Zoom for 20 to 30 minutes, and we can even go through your deals and your portfolios and whatever it is you want to talk about. Take advantage before I cut it off. Keisha Gray, Lady Miz, you will not be disappointed by joining the Academy. Thank you, Keisha Gray. Shout out to all the Academy members. Shout out to Damon Massey. MG's legit. I've been rocking since the beginning. Appreciate you, bro. And yes, kudos to you. Shout out to Joey. Lady Miz, shout out to you with that one rental. And a lot of us just want to get to that next level, right? A lot of us just want to get to that level, like, okay, let's go. Let's continue to build on. But we just gotta be very careful of who we trusting on this internet. Very careful who we trusting on this internet. Gina W says the academy is worth every penny. It's a fact. It's the best money that you're going to spend. I promise you. Shout out to Kendall F for joining the academy today. Welcome to the dark side, player. See you Tuesday. All right? Like, so I say all this to say, and look, I'm gonna put the free link for the free class. If you don't want to pay the $100 right now, have access to the replay, no problem. We're gonna give you a free class, 4 weeks. You don't get access to the replay. Take the 4 weeks, learn the information, and join. And you want to learn more about the academy, just go to mgmortgageacademy.com. The Learning Center, I changed the name from the Learning Center to the Academy. So it's the same thing, James. I just changed the name. That's all. I found him on Clubhouse and interviewed him on my podcast, Shaking My Head. Who you found on your on Clubhouse and interviewed? Who you talking about, Lady Miss? The same pill method thing you talking about? All right, you're back. Let's say I did the HELOC and then wanted to sell my single family a year later. What would that do? I will still be responsible for the HELOC, right? No, you pay off the HELOC. So again, that's a good question. Let me put that question back up there again. And look, this type of question, and I'm just keeping, and this is no disrespect to you. I think Aura Ramirez, I hope I pronounced your name right. Aura, please tell me if I'm right or wrong. I don't mean to butcher your name. But this is what I'm trying to say. This is exactly why I have the academy. Because see, questions like this to me just seem so simple. But people don't know. Aura says, let's say I did the HELOC and wanted to sell my single family later. What would that do? Would I still be responsible for the HELOC? No. Remember, the HELOC is in second position. Your first mortgage is in first mortgage. So when you pay off, there's going to be 2 payoffs at closing that we have to account for. Your first mortgage and your HELOC. And as long as you're selling above those numbers, then the HELOC and the first mortgage will be paid off and closed out. But this is exactly why I have the academy. Because It is here to help folks like you, Aura, understand the whole process of buying, selling, investing into real estate. So the question is, you account for the difference of amortization versus simple interest when velocity strategy is applied. Yes, I am. And ultimately, it still doesn't make sense to me. Either which way, simple interest and amortizations in my book is not the same thing, but it's the same thing. If you want to pay off your bills faster, the bottom line is pay down on your mortgage. You don't need to do a quote unquote strategy of velocity banking and put yourself in a position where you are now you got a gun to your head to do something within 10 years when life is going to life. If you got that much cash flow coming in, if you got that much cash flow coming in, then you can just pay down your first mortgage. And again, velocity banking and any other strategy is for a certain type of person. It's not for everybody. It's very simple. Every situation is different. Not every strategy is going to work for everyone. We have to remember that. If you want to be debt free and you're bringing in enough capital to be debt free, pay down your bills. Oh, damn. We've been on this for an hour and 15 minutes. We got almost 300 people in here. I need more likes. I need more likes on this video. Um, so there you have it. All right. Um, again, the 4-week course, I made it free. You get no access to the replay. Link is in the chat. We're going to put it in the description. And yeah, there you have it, ladies and gentlemen. There you have it. There you have it. There you have it. Uh, I like this. Teresa is debt free. Shout out to you for being debt free. Shout out to you. That is the key. Shout out to Nathan. Different strokes for different folks. Different strokes for different folks. Right? I'm a single mom trying to make it pop. That's why HELOCs are scary a little bit. I understand. And if it's scary to you and you ain't comfortable with it, then don't do it. Don't do nothing that you ain't comfortable with. Don't do it. Stay in your lane. It is okay to stay in your lane. Please understand. Let me repeat this. It is okay to stay in your lane. Don't keep up with the internet. Don't keep up with social media. Don't keep up with your neighbors, your family, your friends. You have one life, and it's your life. Live it by the way you want to design your life, not by how anybody else is saying that you should do something. Do what the hell you got to do for yourself, man. Stay in your lane. Bask in your own glory. Be great. One of my affirmations is, I am him. I walk in it. I believe it. I stand on it. And I'm going to walk in this thing every day. I am the GOAT to me. And I'm trying to be the GOAT for myself, not for anybody else besides my children, right? But like the world, no. No. We don't have to keep up with the Joneses, man. Let's keep up with ourselves. JP says facts. Not the right strategy if you are not comfortable with it. Definitely don't keep up with the Joneses when it comes to the strategy. That's a fact. Look, there's all types of strategies and things to do things. You just got to figure out what works for you. Period, y'all. Period. But also understand nothing grows in comfort. A lot of respect for you too. Thank you. Nothing grows in comfort. Let's not get it twisted. Nothing grows in comfort. So you also have to sometimes step outside of the box, because if you ain't trying to grow, then you ain't trying to grow. You got to get a little uncomfortable sometimes, but still, it's like a tightrope. Balance that shit out. Pick your poison. Figure it out, y'all. Shout out to Gina. Thanks, MG. I've learned so much since joining the Academy. I appreciate you. Thank you, Gina. Shout out to all my Academy members. Tuesday, we got the masterclass, 4-week masterclass. I just made it free. Those of you who decide to go the free option, you will not have access to the replays. Those of you who are part of the Academy, you have access to the replays, plus the bonus Q&A sessions that we're doing every other Thursday during the 4 weeks. All right. Join the Academy today for only $99 annually. Get it while it's hot. I like this comment right here, JP. If you don't have a decent amount of money left over at the end of each month, this strategy can get you in trouble. Play it safe. No shortcuts. Facts. Facts. Play it safe. Damn, MG, I may have to really do this elite class. I'm scared due to ignorance. Thank you so much. And do the elite or because it ain't gonna be here. You better do it tonight, because it's not gonna be here when you think it's gonna be here. I'm trying to tell you that those slots are almost done. I'm almost at my capacity. I have completed the strategy for clients who know the risk and are highly disciplined with their income. Yeah, yo, it works for certain people. It works for certain people. It don't work for everybody. The Learning Center, again, James, the Learning Center and the Academy is the same thing, brother. Received your books last week. Shout out to you. Look, Shantae, take a screenshot of those books and put it in your stories and tag me, please. If you got any of my books, House Economics or the Real Estate Investors Manifesto, make sure y'all tag me, post it in your stories or something. Let me repost you, man. We got that buy one, get one free sale going on. I'm going to end that tomorrow night, though, but I appreciate you and welcome to the Academy. Tuesday, we'll have a good time. So what's the process of increasing your HELOC amount if already secured a specific amount? It's take out a new HELOC and pay off the old one. That's the process. Joey says, I use my entire primary HELOC to buy a rental cash. It's just like a credit card. Use what you can afford. Facts. Facts. Mohammed said, bring back the Haitian CEO for 2024. Yo, his 2023 video last year, this time, went crazy. I think it's almost at 1 million views right now. Okay, I'm going to hit up the Haitian CEO tonight. Matter of fact, I'm going to take this video right now while we live, right? Yo, Herm, I'm over here on YouTube Live right now, and my people like, yo, bring back the Haitian CEO. So I had to show you this video live. You see the chats right here. I'm on YouTube Live right now on the live stream, and they want you back for 2024, man. What we going to do here, brother? What we going to do? We coming back for 2024? A repeat? You trying to repeat? Let's go, Herm. There you have it. The Academy, the class starts Tuesday, 7 p.m., and it's going for 4 weeks, every Tuesday of January. And to be honest with you, I'm probably going to do something every Tuesday for the rest of the year, but I ain't going to commit to it yet. Be honest with you. Joey out here getting to it. That's a fact. Shout out to Joey. Damn, JP in here going crazy too. A HELOC is not an ATM. It's a tool to pay down debt or to get more properties. Fact. I would use it as a tool to get more debt than paying off, to get more debt, meaning more properties versus paying down debt. Me personally. All right. James Christie, welcome. Tag me in your stories when you join. Anybody who's joining the Academy tonight or buying books, tag me in your stories, please. Tag me in your stories. I love the Haitian CEO. Shout out to Haitian CEO. Keisha says she loves you, bro. In fact, let me text on this right now before I forget. All right, so that's all I got for y'all. You know, I hope y'all got some value from this video. Again, this is, I want to repeat before I end this video again, this is not a bashing session on velocity banking or anyone who talks about velocity banking or anyone who preaches it, who lives by it. Every strategy is for different strokes for different folks. Pick your poison at the end of the day. My job is just to give, because it got DM'd to me so many times. My job is just to come on here on Rants and Gems and give you guys my thoughts and my opinions and show you some numbers and teach you how this thing really works so you can really understand, because a lot of people have no clue how these things really work. So the purpose of this video today was just to clarify a lot of things. It definitely was no shots at the OG Myron or anybody who's in the velocity banking space, right? Live your life, do whatever you got to do. I wish you well. Go to mgmortgageacademy.com, join the academy today. Go to mgbookstore.com, pick up the books. We got the buy one, get one free sale. That's all I got for y'all, man. I got to go feed Cash. Okay? Yes, Spencer, this will be repeated. I'm about to log off now. You can go and watch the replay of this on the live tab. All right? So that's all I got with y'all. Let's see. I'm going to tap in with you one-on-one, have some questions for you, MG. I'm building my own Garland Gardens right now. Well, Joey, then you need to get that elite access then, brother. Get that joint tonight because I got a lot of shit to share about Garland Gardens. And if you building one too, we definitely going to be able to trade some stories. So get that elite access, brother. All right? That's all I got for y'all, man. Love y'all. I won't be on here tomorrow. Tomorrow's Friday, and I'm taking a break. I'll be back on Monday unless something crazy comes up that I feel like I need to go talk about. All right? Make sure you download Rants and Gems on all podcast audio outlets, and shout out to the whole EYL network. Again, this is Matt Garland. Okay, Leah. Come on, Leah. She said, I just joined the academy, excited for what's to come in 2024. That's right, Leah. Tag me, screenshot it, tag me in your stories, Leah. I'm going to repost it. All right? Shout out to everybody joining the academy. Again, this Tuesday, January 9th, we got the start of the 4-week masterclass, the Pathway to Homeownership masterclass. It's going to be free for people, right? But if you go to free route, I just put the link in the chat. Once again, you do not get access to the replays. You can watch it live, take your notes, and come for 4 weeks. But you will not be able to watch the replay. All Academy members, you will have access to the replays. And if you're part of the Academy, you'll be a part of the special bonus Q&A sessions we're going to do 2 weeks out of the 4 every other Thursday. All right? Like the video, share this with 150 people, and let's make Rants and Gems the #1 real estate podcast in the world. Matt Garland here, NMLS number 58700, but I'm better known as MG the Mortgage Guy. Peace.